Thank you very much. Yes, again, my name is Steve Van Hoosen. I'm the Director of Government Relations and Professional Services with ASBO, and it's my pleasure to be your host for this webinar today. I would like to make one quick announcement that the materials, the slides for this presentation should be up on the website via the link that you received in your confirmation very shortly and before the end of the webinar concludes. So you could go to that after the webinar ends, and you can download and print off the slides for your reference. I would like to thank our two presenters for joining us from Western New York today. Karen Dumfrey is the School Business Executive, and Tim Hilker is the Treasurer with the Niagara-Wheatfield Central School District. And today's topic is one that we have periodically in a variety of different programs that our association offers, because mastering communication and trust with your superintendent and your Board of Education is a critically important skill to have, and is vital to the success of the school business official. And it is critically important when we are facing hard fiscal times, the ones we're in right now. Most of the problems that we encounter on a professional basis with school business officials from around the state are not related to the technical competence of the school business official. It's not so much being able to know what the job requires, know how to take and find data, analyze that data, transform it into information that's vital for decision making. Most of the difficulties that school business officials have in their careers is the communication piece, is how that information is provided, who it's provided to, in a way that builds trust, in a way that it enhances the culture of success in the school district. So we are very happy that we can provide it to you today, and I'm very happy that Karen and Tim are going to share their expertise and their experiences on this important topic. So Karen, I think you're going to begin. Is that correct?
That's right.
Okay.
Thanks,
thank you,
Steve.
Take it away.
Our topic today is communication and trust with the superintendent and the board, and by extension, I think, with the public when facing hard fiscal times. A couple of years ago when we started to enter into this downward spiral, I remembered talking at the board meeting and telling people the storm is coming. And right as this is starting here, there's an enormous downpour that just started. So I think it's kind of an omen about where we're headed. We're in for a rough ride the next few years, and how we handle it, the professionalism we handle it, and the way we present ourselves to the public is important, because trust is the key to our job in so many ways. The public needs to trust that we're handling their money properly. So I'll go on to the next slide. Lack of planning in Albany has led to a crisis of community trust at all levels of government within the state. Now, you know, I like the representatives, our local representatives. I like the governor. I met the governor at Saratoga years ago. He stopped by for some, I can't remember whether he spoke or whether he just stopped by, but our current Governor Patterson. I like them all as people, but I think that the way the system works, they never set aside anything for the future. And we are in a position now where that would be our saving grace if the state had not really leveraged itself by not only spending every tax dollar it gets in, but by coming up with ideas about how to mortgage prisons through the State Dorm Authority or whatever, you know. I mean, really you need to have something to fall back on, because hard times have been with us throughout recorded history. So that falls back on us, because we rely on the state for so much. Credibility is critical in order for a business manager to steer his district through these times. Now, we all know we're going to have to come to the public next year with a budget, And we might be in a position, as we've been warned by just about everybody, if you were in Saratoga, that the phrase used was, "we'll be falling off a financial cliff." Well, unless you enjoy being a bungee jumper, I think that this is going to be a tough road to hoe here. We're going to be able to only get through it if we present ourselves credibly to the public, if they think that we're using their money wisely and we're using it for what's necessary. And we're behind the eight ball because right before this crisis started, our district, along with many others, had the state controller come in and really undermine the credibility of our school district managers by saying that they were using their savings and putting it away and not using it. So, all the state controllers that I met that came to do our audit, they weren't old enough to remember when I started, which was in the 80s. And both in the 80s and in the 90s, there were also recessions where the state took back aid that they had given out, didn't live up to the promises of their budget because they couldn't afford it. And for prolonged periods, schools had to live from hand to mouth. Programs got cut. Kids walked to school, which, if you don't have sidewalks like we do in our district, is a very dangerous thing. And the things that people love about schools, sports, the extracurriculars, the AP courses, they had to go the way of just waiting until the day would come when we could afford them again. So our agenda today, we're going to cover a couple things. Tim's going to take over and recap the last two presentations we did, which give a little background to what we're talking about. I'm going to talk about how to build trust, how to communicate with your superintendent, what the best practices are for communicating with your board, and then Tim's going to take it back and talk about, the best practices to get us through this hard time we're in. So I'm going to turn this over to Tim now. Let me see if I can make him the presenter by clicking this button, and I think I've got it there. Tim, you with us?
I am. I don't have control. Oh, now I do. There we go. Okay. Hi, everyone. I just wanted to recap, as I did in the last webinar, quickly for you the first two parts of this three-part series. The first one, Kern presented on, was the roots of the crisis. First thing we talked about was the causes, the dot-com bust, which led into the credit easing, which I think is being kind of gentle, and that sort of blew up into the housing bubble and the subprime mortgages, and then it was kind of topped off with some innovative techniques and some accounting weaknesses. The impact it had on the economy, we've seen more recently, is a tight credit market. Individual wealth destroyed, both real wealth and some artificial built in there. Definitely a more competitive job market. And the recovery we've seen, we start to see sort of fall back a little because I think we saw somewhat artificial recovery by people tightening their belts, and now people's belts are as tight as they're going to get, and we need to see the real recovery through increased sales. The government's response to that, we know, has been the era of bailouts and the stimulus, which, as Kern alluded to, is going to fall off here soon, and we don't really know what the response is going to be after next year, but I think we can all agree that it's not going to look good, I'm sure, and the increased deficit, which I don't know how much deeper we're going to go. So the impact on our state in particular, obviously the governor's proposal for the state aid cut is the big topic of discussion. The gap elimination, we don't know where that's going to fall once the budget's finalized, but obviously that's going to be the focal point of our concerns. And I think our problems are definitely going to outlast the recession. And then the last thing Kern talked about in his webinar was, when are we going to see normal again? And of course that's a relative term, but I wouldn't expect to see any real results, measurable results, until probably 2014. We're looking at least another 2 to 3 years, I would assume.
And the normal we return to will not be the same as what it was in the past. There'll be changes, structural changes, not just in the economy, but in state government and in the way education is funded in any number of ways. But that's yet to be seen. Go ahead, Tim.
Yeah. The second webinar, and I see some familiar names, I think, on the list, we talked about a cost analysis, and the first thing we talked about were alternatives for cost reduction, those being whether it be programs or comp time and overtime. I think those were a couple of the big ones we hit on. Some of the tools that we talked about for measurement and for cost savings was, I talked about the cash flow statement, which I'm going to a little bit again today, just as a way to communicate with your board and your superintendent, as well as some software packages that you can use for school lunch, bus routing, asset tracking, things like that. The next thing we talked about in that webinar was the fixed versus variable. Your fixed costs being your insurance, your debt service, things like that. Variables, we're talking about like textbooks and your hourly employees and benefits and workers' comp, things like that. And then we talked about controllable and uncontrollable expenses. Those aren't necessarily synonymous with fixed and variable. The best example that comes to mind is textbooks, because while that's a variable cost, it's not something that you can control. So again, just as a reminder, that fixed doesn't always mean uncontrollable, and variable doesn't always mean controllable. Timing your payments, we talked about accounts payable, and as far as billing and getting money in, the longer you can prolong your payments out, obviously, and speed up your payments in, is the ideal situation there. Allocating your costs to multiple programs. We talked about use of multiple payroll codes and making better use of the object function and location codes. It's imperative to sort that out. Provides a lot of transparency so that you can better manage where all your expenses are. And promoting accountability through that. And one of the keys that I talked about was using multiple fund codes that with your federal funds. That can be a huge help if you're not already doing that. And then maximizing use of your grants. Just the little things, paying employees benefits where you can, paying your aides, a portion of your aides where you can. So just some little tips there. Now I'm going to go ahead and see if I can turn this back over to you, Kern, and we'll get started on the outline of the issues.
Okay, thanks, Tim. I'm waiting for the arrows to pop. Oh, here they come. Okay. The issues that I thought it would be best to cover today are probably very elementary or bread and butter things that you may have heard before, but really they're the things that make or break you when you're in your job, really. I mean, your job is when you're handling, we have a $69 million budget. When you're handling $69 million, you need to have people trust you. You know, it's not like, oh, he's kind of all right, maybe, you know, you need to have people trust you. So how do you build trust in the school community? And then forward from that, how do you make sure you and the superintendent are on the same page? Very important point there, because we work for the superintendent. Very few districts have a independent financial man who answers directly to the board. Most of us all answer to the superintendent. And the next point would be, how do you keep the support and the trust of the board to allow to keep your district fiscally solvent? It's hard enough to sell to people things like cuts, tax increases. Nobody likes that. So you need their support. You need them to face the community and be able to say, yes, this is what we need, if indeed that's what you are going to have to do. And what are some of the best practices that we've implemented? I'll be turning that back to Tim for that point there. But building trust, just as, you know, basically trust, it's like a light switch. It's hard to turn on, but easy to turn off. It may take you, if you're a newbie here at some district, or you just it's your first job out of the program at Brockport or something, people may not know whether you're the go-to guy for a year. You're going to have to earn their respect. And it only takes one screw up to lose that. It's a very, very unforgiving world, and you're part of it. It's a political arena which people are under the microscope of the newspapers and the public and the state controller and the IRS and the federal government, you name it. There's also building trust is the Giuliani effect. Rudy Giuliani, you know, I mean, he could run for president if he wanted to, and he's judged because of how he handled 9/11. You know, he walked the streets. He was out there in public. He made himself present. You know, he is remembered for what he did. We can also be remembered for good or for bad by certain things we did. You know, like if we had to raise taxes 10 or 20% because we had kept our fund balance at 4%, and all of a sudden, you know, as happened to us this year, our state aid's being cut by close to 15% of our budget. Well, we're in a hard place there, you know. So we'll be for good or for bad, whether it's our fault or not, we'll be remembered for that. So that's also part of public life. People remember you by what they read in the paper, and the paper just cuts to the chase, good, bad, or indifferent. A lot of building trust has to do with not what you do, but how you do it. If we walk into this crisis and say, we were planning on this happening, we had plans in case the worst happened, and we were ready for it, that puts your best face forward. That shows that you were being proactive, and you're not just a victim and blaming everything on the state, which really isn't totally fair because they're a victim of what happened to the entire economy. What is trust? Well, the definition, if you go to the dictionary, it's assured reliance on the character, ability, strength, or truth of someone or something. And the etymology of the word comes from the word truth. So if you want trust, you have to be a person who is perceived as somebody who is going to be a straight shooter, is going to tell people the truth. And a product, the result of trust, when you built that trust, is then you influence behavior because people come to you, they ask you your opinion, and they believe in it. Building trust. Trust is built on how the community feels you are using its money. You know, that's very important. I think you can't do enough to put a positive spin on the programs that you have. Our superintendent here does a wonderful job of showing that when he puts a new program in, this is having a positive impact on kids who need it. And he'll bring right to the board meeting a public display either of teachers, or students, or both, and they will be the best salesman you can have. But you have to have that out there, that feeling that, you know, yes, the money's being spent wisely and it's helping kids. And what you say and what you do have to match up. You know, you can't say you're going to raise taxes to put in these programs and then, you know, the programs are minimal, but the money's being spent to cover other things. Credibility builds throughout the district by word of mouth. One or two people are more removed from who you communicate to. So, you know, if you talk to a board member, if you talk to a neighbor, if you talk to somebody you run into in the supermarket, that has a lasting impact. You know, you have to be careful about people also, you know, they like gossip too, unfortunately. That's human nature. And you have to remove yourself from that. If you want to be a positive influence in the community, you have to be the one that comes out and presents your district in a positive light. And that's the only way that that's going to spread. Believe me, it'll spread 10 times faster if you dish the dirt with them. Budgeting with the state looking over your shoulder. Thanks to a lot of negative audits. I mean, not all the audits were negative, but if you were to read the papers, you'd believe they were all negative. Building trust is even more difficult now, and it affects the district's ability to gain the support needed to provide a quality education. You have decision makers that we didn't used to have involved all the time. We have the state controller's office, and you know, the people who came here to do the audit, well, you know, they were nice enough, but they were, you know, in their 20s and 30s, and they've never managed any anything of financial responsibility. They don't remember a recession. They don't really. They were given their marching orders and they did them, and God bless them. But you know, that has a serious impact on you doing your job. And I also find that if you find a state controller that comes in who's older, they've been through it more, they don't see things quite as black and white when it comes to the fund balance, etc. The same districts that were criticized for having too much fund balance are now, I get these emails every once in a while, we're being warned by the state controller not to use up our fund balance too fast. Well, you know, if you've already whittled it down to 4% to make him happy, the chickens are gone. And this is going to lead to a return to the past. And this is the way it always was when I started budgeting by referendum. You wouldn't put one budget out to the voters. You'd put out a half a dozen propositions. Okay, are we going to have sports this year? Are kids going to walk the mile and a half to school, even though they're in first grade and it's a busy street? Well, put it up as a separate resolution there, and they'll, you know, the tax increase that's related to that will be 0.25%, of, you know, or for sports it'll be 1%, or are we going to have extracurriculars? Put that up. Are we going to have school buses, or are we going to drive around those ones that have 250,000 miles on them? Put that up. And you're going to have long, confusing ballots with many propositions. That's what I see happening. And the net result will be good programs will fall by the wayside. But that's my conjecture. I just see if we get into hard times, that is one tactic that was used in the past during hard times, and I can see it. I've already seen it coming back a little bit in this last one. But to move on to something we have a little more control over, how do you make sure you and the superintendent are on the same page? You have to follow the line of authority. With few exceptions, such as the claims auditor, the Board of Education only has one employee, and everybody else works for him or her, the superintendent. And when you're trying to build trust and confidence with him, always remember you're both looking for the same things: trust, support, good communications, and recognition. And it's like any human relationship. Above all, be loyal and sincere. You can disagree with him, but tell him to his face you're going to disagree with him. You don't do it in public. Anticipate your boss's needs. Become your boss's best resource. If you had a good resource, wouldn't you want to keep that person happy? I know I feel that way about the people in my office that are indispensable. I couldn't do enough for them. Rather than take action without permission and apologize later, know your authority and stay within it. Don't dump problems at your boss's door. Instead, present the issue and then give him a plan, or give him some plans on how to solve it. Keep your boss posted. Keep him up to date. Nobody likes to be blindsided. Sometimes I feel like I'm wasting my time because I warn him about things that may never come to his attention or may never happen, but I feel like he needs to know. Don't go over your boss's head or steal glory from your boss. Respect communication channels set by your boss. And those channels you have to get from your boss. These are those types of channels. How? Does your boss like to be updated or alerted? Does he like to be emailed? I had a superintendent who liked everything in email because it's in writing. She had it in writing. She now had something tangible she could refer to later, and she liked that. Some people don't like that. They like the personal touch. They want you to call them up or stop by and talk face to face. And that's a personal preference. They both work, and you have to figure out which way works the best for your relationship with the boss. Does he prefer formal weekly meetings or spontaneous discussions? You got to follow that lead. And does he want the whole story? Does he want to know the great details of every issue, or does he just want to get the headlines and have you cut to the chase and ask for backup? He'll come back and ask for backup if he wants it. What's his pet peeve or her pet peeve? I think every human being's got some things that they just are annoyed by, and they'll find those annoyances in the workplace here in some parts of the district, know what they are, and know how to steer clear of getting involved in those. And what are the biggest issues of the district? If you know what the biggest issues are to the superintendent, what he sees as the biggest issues, then that gives you a chance to know what you can work on to help him out. And that helps your relationship. What info do they need, and when do they need it? Some people, some superintendents really want to know, where we are with the budget, or where we are with the BOCES spending, or where we are with a capital project is always a big thing. That's the kind of things you want to tune into and know best how to update them on. What makes your boss valuable to the board? Usually boards hire a boss for, maybe 2 or 3 major reasons, and you want to help them shine in those areas. And what's the hot issue at your district? Get on the same page with your boss with that issue. If there's a hot issue that's going on and You're just he's just out there hanging out there by himself on it. You're not being his good lieutenant. How do you keep the support and trust of the board to allow you to keep the district fiscally solvent? Well, you're going to need that too, even though the superintendent's in charge and the superintendent presents a final budget to the board. You're the one that's really out there. You're the one doing the presentations. You're the one that's putting it together. You're the one that they're going to look to, and you've got to get along with the board one way or another. They're the public relations committee of the district, and you've got to find a way to get when it's budget time to get the boards to agree, even if they're going to disagree on things without becoming too disagreeable. They're going to have to somehow compromise on what we're going to adopt. You're going to have to keep them posted on the big issues, and one way to do that is use your auditors. If you've got auditors that are halfway decent, they should be able to stand up and give a report and say that you're doing good financial stewardship. If you are in a position where nobody is, they think you're crying wolf when you're saying that you're heading towards a financial cliff. The auditor's job is really to report to the board, not just whether the books were balanced, but part of their job is to present a management letter, and probably the most critical thing in a management letter is to say whether you're going to be solvent or not. And you want to back up your accounting data. You want to back up the needs of the district with accounting data. If you wanted to show such and such a program is good, bad, or indifferent, you've got to show specifically just what it's costing. If you want to show the impact of, recently we got a letter from the IDA saying that they wanted us to pay back $120,000. You need to keep them posted, because these are issues which are outside of your control, but they need to know. They need to know because that helps them justify to the public what the district is doing. And every major project must have a communications plan. Whenever you do a capital project, you've got to gear up a good PR for it. And you're going to be a big part of that. You're going to have to be able to convince people we can afford it. The biggest contribution is doing your job well and solving problems when they're still small, before they get to be a crisis or a catastrophe. You prevent problems from reaching the board or the public. If you have the money, if the money's in the bank and you're following the purchasing laws of the state and all the other million laws and getting the reports in for state aid and all that other stuff, nobody gives you a gold star, but those are the things that are probably your biggest contribution, because that's what keeps the district out of trouble. And on the other hand, the Chicken Little approach doesn't always work either. If you're constantly warning about disaster, you lose credibility. And here's a cartoon about somebody who's worrying too much, and it doesn't do any good. Well, it does, because 95% of the things I worry about never happen. Now, I remember when I started this job, I couldn't go home at night and really relax because I was always worried about things, but I'm no longer quite in that boat. I think about them, and I do worry to some degree, but if you don't, that's when things can sneak up on you. You have to learn yourself, what are the things to watch out for, and You just can't always assume as a Pollyanna that everything's going to go well. One of the things you can do is demystify the black box of school finance. Have an open book policy on finances. There's really no great mystery here, or there's nothing we need to hide from people here. I don't really care if anybody wants to come in and look at anything. And holding finance workshops, that's always a good idea. People are always interested in this stuff, although whenever you announce them, you really get a small turnout. But it's always good to say that you offered to explain all this. Link the expenditures you're doing in your budget presentations to the programs that are really going to help the kids. And that puts relate what's in the budget to what good is being done. That really helps you make it a sales job. And it's possible, if you really wanted to go all out, you could create a district finance website for the community. Some districts do that. What if board members join because they have an issue that they're personally upset about? Communities can't think creatively until they have expressed their fears and concerns. And you really can't expect, you're blessed if you don't have any problems in this area. You can't expect a superintendent, the board, or the public to automatically agree with you, even if you feel and can prove to yourself that you're right. Human nature makes people question, argue, and they want to know what are the alternatives. Well, they like to have the alternatives always be totally pain-free, too. You may also have to contend with people who are angry over taxes, and then they either don't believe anything you say, or they really don't care. And unfortunately, all this comes with the turf. I think if I were to tell you some easy way to handle these problems, I would be fooling you, because this is just going to happen. It's human nature. And one of the things that I think is probably the worst thing that a business manager gets put into is when the board puts you between themselves and the superintendent. When the superintendent recommends something, and then they say, well, let's go ask the business official if we really do have the money for this, and without raising taxes, or let's go ask the business official if this is really okay to do it this way. And now if you're working for the superintendent, that is really a terrible position to put the business manager in. So how do you handle that? It's not an easy one, but what you have to do is talk to the superintendent well before this stuff happens and ask him, how do you want me to handle people that drop in or want to have an appointment with me to talk to me about stuff? And how do you want me to handle direct questions, either at the board meetings or from the papers or from board members that call up out of the blue? And what approach would you like me to take when I get requests for information? Maybe some superintendents don't care. Hey, speak your mind. Some are not going to, be that way. So you better be on the same page there. So at this point, I'll turn it back over to Tim. He's going to tell you some of the best practices you can try to use here in this crisis to respond to these things with the use of reports that superintendents, boards, and the public would want to use. So I'll try and see if I can click on his name. I got to push that button and this button. Tim, are you there?
I'm here.
Okay.
There we go. Thanks.
Boxes pop up? Go ahead.
Okay. Well, this is kind of just in addition to the normal reporting that you do. I assume most of you probably submit treasurer's reports and sort of summarize where you are in the budget when you're speaking with your superintendents and your boards. I want to, and I apologize for those of you that were in the last webinar, but I just want to talk about this again quickly, the cash flow analysis, because I think this is a very good, very basic way to communicate to, hello? Hello?
You still there, Tim?
I am.
Yeah.
Everyone?
Is everybody else out there?
Steve is here.
Okay.
So I think we're still fine.
Okay. Sorry. Like I was saying, though, I think this is a very good, a very basic way to communicate to people who may not have the financial background that most of us have. So when we're talking about cash flows and we're talking about projecting, more importantly, a good rule of thumb is to estimate your revenues at or below current year levels inclusive of the proposed state aid cuts. And I know superintendents are putting a lot of eggs in the basket that when this thing settles that the state aid cuts aren't going to be as bad as what the governor has proposed. But I think the prudent thing to do in times like this is to try to get it through to them that it's important to go forward with the mentality that you are getting cut that much, and that's going to give you a little cushion when the dust settles and they say it's only going to be 60% or 70% of what we initially thought. Whatever that turns out to be, like I said, I think the prudent thing to do is to go forward under the assumption that it's going to be 100%, and you'll find yourself with a little room to work with. When you're estimating expenses, I think a good rule of thumb for those that you have to estimate your payroll and your general warrants is to take 102 to 104% of the current year levels. Some of your costs should be easily identifiable. Your debt service should be pretty well mapped out for you. So just a good rule of thumb, and this just gives a good idea of actual money in versus money out, as well as where you are in a cash position for year-to-year comparison. Good practice is a 2-year comparison. Here is an example. I hope you all can see that all right. Maybe when you get the slides, you'll be able to read this a little better, but this is a sample of what we use. I've changed some of the numbers just for confidentiality, but just really general way of grouping your revenues and your expenses. This is, I think, the most basic way that you can break it down and communicate this to, like I said, people who might not have the same financial background that you do. And like I said, you can see in my notes down there, I've just included how we've estimated our warrants and our payroll, and I've noted that the March state aid payment reflects the proposed cut for next year. So if you have any questions about this, as I did before, I'd be happy to send you a template if you find this to be useful. I'll have Kern's email as well as mine up at the end of the webinar, and you can email me, and like I said, I'll be happy to send that to you. Just real quick, this is really important to get through to your superintendent and your board, because I think the mistake that some of them make, especially in times like these, is that because there's money in the budget, there's money in the bank. And it's an easy mistake to make, but this is a good way to show them that that's not always necessarily the case. Moving on. Relate to your audience. Most of us live in a modified accrual world where we think in terms of fund balances and deferred revenues and estimated revenues. And when we get, at the end of the day, when we get down to it, fund balance is the bottom line, and that's what we want to know about. But when you're talking about planning, whether it be short-term or long-term, you want to try and speak in terms of cash accounting and try and only bring in the really important accrual pieces. And that's why I think the cash flow statement is such a useful tool, because it helps illustrate that in a way that's easily seen. So
that's right. They don't worry about it if your fund balance is 2% or 1%, but they're going to worry about it if they find out they're going to run out of money in a month or two. That's something they totally can relate to.
Yeah, which is a good segue into my next slide, which is the costs of borrowing. One thing to consider is if you're not careful in your planning for your cash position, is the added expense of short-term lending, including administrative fees and interest rates and things like that. The other thing with being in a weak cash position is if you have a low fund balance, that will also affect your credit rating, and that increases those costs associated with borrowing. And then also consider the potential cost savings that can be realized through bond refunding. This was something that we took advantage of this last year and saved us a little bit of money, not a ton, but every little bit helps in these times. So talk to your financial advisors and see, with interest rates the way they are, if that's something that might be an opportunity for you. Cost reductions, these are some of the things that we talked about in the second webinar, but just to highlight them again, when we first sat down and started having these conversations, the low-hanging fruit was the equipment. We cut the majority of that out of our budget for next year, and that's, I think, going to make a huge difference for us. If you happen to be around negotiation times, start thinking about employees paying a portion of their health care if they're not already, or if they are, consider making that a larger portion, because with the cost of health care, it's becoming one of the biggest expenses that we have. Retirement incentives versus layoffs. Sometimes the retirement incentives have a little shell shock, but when you consider the cost savings realized through retirements versus layoffs, where you have to pay unemployment, and where you're usually laying off a lower step individual, in the long term, I think the smarter thing to do is to consider the possibility of a retirement incentive. Travel for professional education is another thing that we've kind of tightened our belts on. Field trips and transportation. Get your principals and your teachers talking to each other about field trips and consolidating them, and coordinating the transportation better, because that's one of the biggest costs of the field trips. We're talking transportation too. We're talking about sports, so look at your sports programs and where your teams are traveling to, and make sure that you're doing that in the most efficient manner possible. Comp time and overtime, a huge issue. Again, we talked about this in the last webinar, but that it can add up really quick. I gave a very simplistic example of one employee, only a few hours, a few weeks out of the year, and it adds up. It starts adding up to a couple $1,000s cost to the district, and then if you're a larger district like we are, you multiply that by a couple hundred employees, and all of a sudden we're talking about hundreds of thousands of dollars. So something to take a look at if you're not already. Substitutes, that kind of ties in with the comp time and overtime, but that also ties in with your travel for professional education, as well as other things that are keeping the teacher out of the classroom. So your aides and monitors, just look at that. Same thing with class sizes. Just make sure that you're maximizing the use of your resources, because more often than not, and again, it's not a personal thing, it's just a business decision where you've got to say, okay, we can do this a little bit better, and we don't need all of these people. Developing timelines. I think as far as a timeline on a spectrum, sort of, that varies from district to district, but these are just some points that I came up with to help you. We talked about the cash flow projections going out 2 years. It's very important, because while some of the estimates that I highlighted are somewhat conservative, it will show that over time you're liable to be in a negative cash position over the next 2 years. And again, that can be a powerful tool when you're talking to your superintendent and your board. Short-term borrowing, again, something you want to stay away from, but at least have enough foresight to know when you're going to need cash 45 days in advance, because I think even that is somewhat aggressive in terms of getting a short-term borrowing through all the red tape. So at least know where you're going to be in a month and a half to 2 months. A tax levy increase. For most of us, we were fortunate enough that this year we didn't have to, but we know now next year that we're going to have to. If you can do that a year in advance of when you have to do it, that's the smarter thing to do, because one of the things that Kern kind of pointed out to me when we started having these conversations was that 2% this year and 2% next year equal more than 4% next year because of the additional time that you have that first 2% coming in. So think about that, and that also helps with the sticker shock of coming out to your public and saying we need to raise taxes 10%, where if you had raised it 5% this year and 5% next year, that might be a better approach. Discretionary cuts, I assume that most of us are looking at that now. Don't wait. There's really no reason to, and there's nothing really gained from waiting. If you have the ability to make the cuts, do it sooner than later. Position cuts, if they're non-teachers, that's not necessarily confined to a school year, but obviously I think for teachers, April, May is the time to start thinking about that. So if you haven't already, start planning around where you can consolidate classrooms, and if you have retirements, how can you avoid replacing those teachers, things like that. Use of reserves, I would say at least a year. You want to budget for that and plan on using that. I wouldn't use that so much as a plan B when you run low on cash, as much as I would plan it for next year in your budget. Use it to avoid raising taxes, and sort of build that around the cuts that you're making. So just to kind of wrap up, we covered the roots of the crisis. I think that was a great summary of how we got into this mess, and what the outlook is for getting out of this mess. Unfortunately, I think for New York State, once Wall Street starts to get its sea legs about them, we're probably looking at another year to 2 years recovery time for us here in the school districts. Analyze all the relevant costs. This is when we're talking about the second webinar, the fundamental cost analysis. You're not always going to have big chunks that you can take, but look at all the little pieces, because I think you'll find that they start to add up really quickly. And then communicating effectively, that's the biggest thing, and I try to impress that upon all the people around here, is that it's not so much that you're doing your job, it's how are you communicating what you're doing, and how are you communicating as a team and working together as a team. Building trust with your superintendent and board, that's imperative. You've got to be a management team again, to get things done, to do them well, and have a survival plan. What are we going to do if? You always want to be asking those questions, and how can we do this better so that we don't have to get to that point? And then best practices, develop them and share them. One of the things I put on here is use the ASBO Web-site Forum as a medium. It's a good place to share what's working for you, what's not working for you, what can we do better, how can we help each other. I feel like I'm sort of new to the arena, but I feel like that this is really a tight-knit network of people, and there's a lot of good to be gained from talking and sharing best practices with each other. So, Kern, unless you have anything to add to that, I think we can go ahead and take questions.
No, that was a nice summary and a nice presentation on what you can do, how to be proactive. So, yeah, let's take questions.
Okay. Thank you, gentlemen. Right now, Kathy will come back in, and she will tell you what you need to do to start asking some questions.
Ladies and gentlemen, at this time we will conduct the question and answer session. If you'd like to ask an audio question, please press 7# on your phone now, and you'll be placed in the queue in order received. Please listen for your name to be announced and be prepared to ask your question when prompted.
Well, very good. Thank you. Yes, I would like you to also note that you can still send some questions in via chat if you don't want to be on the telephone and be heard live. You can still type your questions in, and we can address them that way as well. We'll give you a couple minutes to get dialed into the queue if you have any questions. We do have some sufficient time here, I think, to go through a lot of questions if we really need to. One of the things that was brought up during the presentation that, as I kind of alluded to when I made my opening remarks, was that business officials and people that work in the business office get into more trouble with the communications and the trust piece than they do in our experience, where people at least contact the association and let us know that they're having trouble or they need to utilize our legal services because the trouble has already gotten a sufficient point down the track is not the technical details. It's not the ability to do the job and get the information and file the forms. It's in the communication, the transmittal of different pieces of information to different people and in a way they expect to receive them. And so when Karen was going through that, I just wanted to highlight the concept that learn how your superintendent, your boss, wants to receive information is a critical piece, because we have seen that a disagreement about having meetings is valued by one person more than another, whether email is valued by more person than another, formal versus informal communications is valued by one over the other, and it creates tension, and that tension then leads to a breakdown in communications, and then it's downhill from there. The other one that I think that I would just like to highlight, because this one gets brought up to the association quite a bit, is that position that he talked about where you're having questions come directly from either community members to the business official or coming from board members directly to the business official in a manner to circumvent or second-guess the superintendent. And that is one of the clearest and quickest ways to wind up in trouble, because, as he noted, you are working for the superintendent. And when you create that power play, the business officials almost never win that power play. The superintendent may survive, but we've seen more often than not that neither one survives when that type of thing starts happening within a school district. So just from the association side, from what we encounter with business officials, those are right on top of the list for career killers.
Yeah.
If you want to jump back in on that, that's great.
No, Steve, I just wanted to add to that a little bit. You're absolutely right. The good communication and the constant communication provides some transparency, and we talked a little bit about this webinar as well as a little more in the second webinar. We talked about the financial transparency, and not to undermine that because that's equally important, but those open lines of communication provide transparency in what you're doing, and I think a lot of problems can be cut off at the pass through that.
Clearly. We have a couple of chat comments and a question that have come up that we'll jump right into. Michelle Mattice has a question here. My district would like to be able to purchase a POS system for our cafeteria. Do you have any ideas on grant funding for this item? So a little bit off the track of communications, but we do have some extra time. So if you gentlemen want to share any knowledge you might have about those point-of-sale systems, and if you're aware if there's any grant funding for those.
I think the best I know of on how to get any funding on it is BOCES does offer that as a service, and there's several different packages out there that if that at least you could get the BOCES aid on it. And there's also shared cafeteria management services out of, is it, oh God, I don't know which one it is. It's one of those Finger Lakes. The Finger Lakes BOCES does that. But I don't know of any grant that's available for that, frankly.
That's something that from the association I can we talked about the or at least Tim did mention our forum that we have to ask questions.
Mm-hmm.
Michelle, you might want to go there and post that question and widen the audience a little bit to see if anybody would like to comment back on that. If you have any questions about how to do that, you can just send me an email at steve@nysasbo, and then I could post it for you with a link to check in to see if anybody's providing any suggestions on that. We do have another comment. Charlene has wanted to emphasize a point here, and she says that it's imperative that there be open communication between the superintendent and the team in the district office. Rumors, both good but more often bad, get started, and that is, I think, both our presenters would agree with that comment.
Yeah, absolutely.
Yes, absolutely. You know, I think that the team of administrators definitely has to be in on the loop. I think I've had some experience in the past where it was a entire central office meeting, which included clerical, etc., and that was, I think, overkill, because then it's almost like publishing a blog now. Everything that came out now became public knowledge. But if you have a good team of administrators, definitely you have to keep them all posted and working together.
Kathy, do we have anyone on the phone in the queue at the moment?
No, we don't have anybody in the live queue.
Okay. Let me just make a point here also, is that I noted that the slides and the materials would be available before the end of the presentation. They are up now. If you go back to your confirmation that you received for this webinar, on the bottom of that, the attachments are there, so you can go ahead and download those, print them out, and use them as your reference. And I see we've advanced the slide, and Kieran and Tim have put their email addresses up here, and I believe that they'd be also willing to handle questions if you wanted to email
Sure.
One of our presenters with a question or something. I'm sure they'd be more than happy to take a little bit of time to respond to you. Is that would be? I suppose you wouldn't have put your email up there if you wouldn't accept the question.
Right.
Right.
So I don't think you're being too presumptuous there. You can always also send that question to ASBO, and we could get it to these gentlemen. Or again, I would emphasize you can go on our website and post forum questions and broaden the loop, because there is a vast amount of experience for people who've gone through these situations before, and who have actually gotten into some trouble and come out on the other side, and who have very good stories to tell about how to recover from some of this as well. Do we have anybody on the phone yet?
No, still no live chats.
Okay, and I don't see that we have any other chat questions coming in, so what I'm going to do is ask for a last call and give about 30 seconds for you to submit any chat questions that you might have, or get in the dial-in queue and get ready for those.
That's £7 on your telephone if you would like to ask a live question.
And I'll just take this last opportunity to thank both our presenters again for taking the time to present the 3 webinars in this series, and that is something that goes above and beyond professional responsibilities and giving back to people in this field. And so I wanted to thank them for the time that they've put into preparing these and sharing their thoughts before we end.
Well, I've always felt that I've learned an awful lot more from my colleagues in ASBO than I could ever share back to other people. That it's been a wonderful organization over the years, and the camaraderie, the professionalism. I don't know of a single business manager I can't call up and ask a question to that doesn't drop whatever he may be in the middle of and try to help me. And it's been that way since I started. So yeah, it's that's what we're here for. We're all in this together. We all have and we all have the same problems. And one thing I think everybody should always think about, if they are overwhelmed ever, we've all gone through this together. And once you talk to your colleagues, you realize everybody's got the same problems. Everybody's got the same worries, and it helps you put them all in perspective.
Yes, and one of the things that I've noticed about the people who are members of the organization, but the professionals, whether they be the business officials or in the business offices, is their willingness to help each other. One of the things that you recognize about this particular field and this profession is it's pretty specialized. That the type of knowledge and the information that you need is not broadly out there for most people. So you have to rely on each other to get through certain things, like Karen just said, and don't be afraid to do that because when you deal with this type of information and the responsibilities, you can really only get it from your colleagues and your association. It's not like some other professions. It's really very important, and we hope that continues. One comment here is that question from Sandra is since this is the 3rd seminar in this series, will our transcript be updated with the workshop credits? And yes, it will. As soon as we finish with this final session, and we'll match up the sign-ins for the websites to make sure see who had signed in for all 3 of them. We'll post it as credit for the 3 webinar series course, as well as post credit for anyone who is picking these up as individual webinars along the way. So let me ask, is there anyone, Kathy, that's on the phone?
No, there aren't any questions in queue.
Okay. Unless our colleagues presenters have any final remarks to add at this point, we'll wrap up right here. Karen or Tim?
No, I think that we've covered everything. Thanks for all your help.
Yeah.
Okay.
Yeah, it was a pleasure.
Well, was certainly was ours. So again, transcripts will be updated. You can download the presentation, so you have that available to you as well at this point. And from the association, we want to thank you for participating in this webinar. If it's your only one, if you're completing the 3 series, thank you for that. We hope you found the information that's been provided in this and the other webinars in this series helpful, and we hope that you will continue to utilize our professional development offerings in the future. So from New York State ASBO, thank you very much, and enjoy the remainder of your afternoon.
Okay, goodbye. See ya.
This concludes today's webinar. Thank you for attending.